Good morning, good evening, good afternoon, traders around the world. This is Phil V at Trading Capital Markets. We're currently 9:28 a.m. and we are the 9th of May 2025. Let's get into it. All right. Over here we had the break in structure, and I went to go see on the 5 minute if it was a sweep. In fact, it was a sweep. Bodies didn't close below this low, stayed above, continued higher. On the 15 minute, same story, but even more apparent. Now we're currently trading within this daily order block. And let me show you guys what I mean. This daily order block that started the whole down move right here. So let's see at market open how we react. Remember everyone, today's Friday. Keep that risk management tight. And a trader that follows his rules is better than a trader who has better rules. So let's do this. $9.30 candle right here. So let's see what we got. Nice push above these highs. Right into this last 15, I think it's 15-minute fair value gap. Yeah, exactly right here. 15-minute fair value gap over here. 15 MIN FVG. Fantastic, like that we know it and we see it. Go back to the minute chart. And this is a premium wick, right? From this move, premium wick. We are having a hard time. Let's swap them around. We're having a hard time passing the 25% of that premium wick. Now we're making our way back down. All right. So some sideways action for the open. No decisive movements so far. The buy side is resting above here. And if we take this buy side, we might make our way back to these relative equal highs over here in this box. So I'm going to take this off. I don't like seeing colors on my charts like this usually, but that's an important order block, so I'm going to keep it there. and that's the consequent encroachment of the order block. As you see, they just pierced above briefly yesterday in the PM session. Well, PM, yeah, PM, 12:30 to okay. Hey, hello, hello, Roger. Yeah, nice movement. Yeah, I did catch it. Yeah, here, let me show you. So here you go. Yesterday's trade. Remember, we were in down here, right above that second 15-minute um, fair value gap. We had the first one, we took it off, took this position, and we took an average of 120 points yesterday. So the first loss we had was a little one, and then two big wins. Yeah. Yeah, I didn't catch the rest of the move, but that's a pretty good part of the move. And I'm fine with not having caught the whole move. It's an amazing trade. That's right. Profit is profit. Now let's see what we got going on over here. Let's see if it's going to pass this premium wick. Okay, so here's our first presented fair value gap. And remember yesterday I was telling you the volume imbalance. Let's see if the volume imbalance passes. Oops. Let's see if the volume imbalance passes the consequent encroachment. Fair value gap. Here you go. It does, ever so slightly. So we take this, we adjust it to the bottom of this wick, and this is our first presented fair value gap for the day. Now let's see how we react around this. Over here. I like stretching it out in time and going all the way to 11. It gives you a visual cue of time. How was the rest of your day yesterday? Tapas y cervezas? Nice price action over here. Let's see if this one's going to close within that 15-minute fair value gap. Okay, yeah, good. Gym is important. The gym is ultra important. Gym or whatever type of training you do for your brain is super good for trading. All right, so over here we broke above. Oh, yeah. Yeah. Oh, so you watched the okay, so you watched the live again. Reviewed again the live. Awesome. That's so cool. So I was wondering who saw it again. Okay. So here's the decisive move above the 50% retracement of this premium wick. I'm working on building a gym in my own home in your own town. Okay. That's a cool project to do. It brings a lot of people, some nice people, some high quality people in your life too at the same time. It's a pretty good project. It's not a very big culture in Europe, the people who go to the gym and train. In North America, more so. I've noticed because I was going to the gym down there when I was traveling. So I was finding a gym in every town that I would go. Yeah, yeah, yeah. Who's the most iconic classic bodybuilder? Oh, yes. What's his name? Chris Bumstead. Yeah, Chris Bumstead. Yeah, that is true. C-Bum. Yeah, he did. He's doing good. He's doing good. He's doing good for himself. All right, over here, market structure might shift. If we break below these lows, we might come take these relative equal lows over here. And that's like 40 points away. Let's see, let's see. It's so hard getting people on your live stream. I don't know why. Maybe it's the title. Uh, the title. I don't know. Maybe it's the type of content I post. I have to look into it a little bit more. Maybe it's the also the thumbnail that I use. Who knows? Okay, so over here, we'll take this down to here because the wick did not pass the 50%. I'm going to take off the fibs, make it a bit cleaner. I like how we passed straight down through the first presented fair value gap, and we dipped right into this bearish fair value gap and continued lower. Yeah, but people. Yeah, 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 exactly. Well, thank you so much, Roger. That's nice to hear. I try my best. I do my best. For sure, over time, I'm gonna get better there. Yeah, I have to learn video editing. That's the not fun part, but I'll do that. That's for sure. Yeah, exactly. Yeah, it's a good idea. But I don't know, do people actually watch those? Probably new traders watch those. New traders. Yeah, good idea. I'll start posting some shorts. All right, so here we're seeing the shift that we were talking about right here. And then we might come and attack these lows right here. Yeah, exactly. That's what I want to do. I want to appear to the good people because, I mean, some, most traders are gamblers, right? They like degeneracy. They like seeing people being degenerate on streams. Exactly. Okay, so we took these lows right here. We left a little fair value gap. Let's see if we're gonna cross it. That's tiny, you see? We just crossed it. Good. And straight down. Yeah, it's difficult to find those people only. It's okay, we'll find them eventually. Let's see. I don't see anything for now. And as you see over here, we didn't close below with the body. So these lows, this low, um, we might, no, we didn't close below. We made a new high over here, but the bodies didn't close below this wick. So I'm gonna remain patient. Yeah, exactly. Yeah, exactly this. For example, right now, yeah, you see, so the body didn't close below this low. So I wouldn't be inclined to take these shorts yet. And you see there's a lot of full range motion over here. The wicks coming back into, yeah. Yeah, it's important for new traders, but it's like you have to, there's not many people that do lives that talk about the things that I talk about. Most of the people are just there to entertain like the chat, which is fine. I mean, but it's important to speak about the specificities of what to take and when to take the trade. Yeah, they're paid streamers. I'll let the trading pay me. Okay, cool. 2022 now. Yeah, no, it's the best. ICT is the one and only. So yeah, so for whoever watches this video again, if ever, ICT is where you should go look on YouTube. Yeah, I learned it from him. The Inner Circle Trader on YouTube. It opened my eyes to everything. No, I didn't trade Forex. Forex before. I was more of a gold trader. But believe it or not, I was my bad, unprofitable for about 6 years. Well, 5, 6 years, and it's the last 2 years of my career because of ICT that I've been able to have a certain structure in my trading. Because it's very important, the language, when you trade. Language is important because it's markers that you're able to retain in your memory. So if you associate uh, like zones with words, you're going to be able to remember them more easily. I give all my credit to him. Yes, obviously there's time in the markets also that helps me with my edge, but using his concepts really changed the game. Yeah, I can't believe it. I can't believe the quantity of incredible videos that he posted too. It's crazy. And the fact that people don't know about it is even crazier. But that's fine with me. You see over here, we went to go and take this low, but we couldn't, and we wicked back up. 10 seconds left to this candle. Let's see. Yeah, exactly. Well, to be fair, we are retail too, but this retail with an edge. I would say retail with an edge. Okay, over here we broke these lows. Wicked back up. Let's see if we're gonna close above here. Yeah, I get what you mean. Yeah. Okay, so now we close below. We closed below, and now I'm gonna stretch one out over here. Let's see until where it gets. We just tap this one. There's volume imbalance. That's why I included the top, the body, and didn't pass the consequent encroachment. Well, the majority of trades, yeah. Well, for now, yeah. But we might be at a turning point, right? So let me show you. You know, markets are fractal. That's what he always says. So since markets are fractal, wait, let's see this. It's right over here. Right before I show you, let me check this out. Closed below. This would be a possible short to come get these relative equal lows over here in this candle. Broke right through. So the reason why I did not like this and I didn't take it is because it bounced quite hard and closed within the range of this previous candle. Took out the high of it. You see, we're really we're really stuck. And the other reason why I didn't take this trade short, right, is because we're still within this leg long. So it could be like a fake out below these lows. Just take some liquidity over here. Come back to this three candle down, which is the order block. So 3 candles down is a bullish order block. And at the top of that 3 candles down is exactly where it started buying. So yeah, you're saying the majority of trades in the Nasdaq are buys. Um, yeah, so that's for sure over the long run, because markets expand, right? Or the majority are buys. But on certain swing points, like right here, right now, it's possible that, let's take off all the drawings, hide drawings, perfect. It's possible that we start creating relative equal highs. We don't pass the top of this order block over here, and we start coming back to equilibrium. So let's say if we take this move over here, wait, let me delete all these drawings just for the example. Oops, that's the wrong thing. Delete. Wait, where are they? Oh, here. Boom. So just for the example, if we take this, come back over here, up top to the high, you see where the 50% is? It's right almost at the top of this volume imbalance. It's a new day opening gap from Tuesday to Wednesday. We might not be able to pass here, start rounding off, and make our way down here before coming to take these relative equal highs if it decides to do so. So yeah, Nasdaq, most of the time it's buying, but it has to rebalance in order to keep on buying, which is logical. Now the question is, right? Let's see, let's see. So we have this, we were currently trading within this leg, and let's start this price action from here. Go here, down here. Did the bodies close above? No, they didn't close above. So this was the next high, low, high, low, and then high over here. And then the new low was over here. So in order to continue the trend, we have to break this high, not this high. because now we're currently it could it can reverse off of this fair value gap since we broke these lows as a market structure. But now if we have a double break, so if we have a break below and then we have a break above, right? That means this was most probably a sweep. And then you could see it in like the 5 minute. There's your sweep. You see? Only wicks. It swept, bodies closed above this low, and continued higher. So yeah, it's important that you take a step back, right? And you look at context. Yeah. It's really it's most people get caught up in the oh my God, the now, the right now, what's happening in front of you. But you really have to take a step back, zoom out, and form different opinions for other time frames because yes, they could create traps on a 1 minute time frame for most of the people. And this is exactly the trap that we were talking about right here. Boom. But no bodies close below this low on the 5 minute. So that was part of the trap. But at the same time, if you go down on the 1 minute, this could be the point where it continues to descend towards these equal lows. This last 1 minute fair value gap over here. No, I don't look. I typically don't look at them. They're a bit odd. Maybe like I don't know. No, I haven't looked at them. It's also the fact that I've been so used to seeing the 1 minute patterns, right? So if I switch to a different time frame, it's going to take me time to adjust, and that's potential profits being lost or mistakes being made. So I'm really comfortable on the 1 minute, 5 minute, 15 minute, everything above that I've been accustomed to for a long time. Because for sure you're gonna have an adjustment period if you change time frames. Because it's gonna be some patterns that you've never seen it before. It is patterns that you've seen, but it's like a setups. So it's nice what we're doing over here. We're using this as support. Let's see if we could. Now we're going to be stuck between the first presented fair value gap and the consequent encroachment of this uh, last bearish fair value gap over here. Okay, so that's nice. We closed above the consequent encroachment. We use this first presented fair value gap as support over here. I'm just very careful right now because I don't like these relative equal lows. 1, 2, and 3. They created liquidity. They might drive it right back down to come and sweep them. And we have a bunch of fair value gaps over here that haven't been visited. So I like to be a little bit more cautious, and we're Friday at the same time, so let's trade a little bit safe. So these are the two fair value gaps on the minute that haven't been visited. There's that, and there's also this. That's the last line of defense, and that is the order block. So the wick stopped at the body of the order block, and now we're driving down. There's a lot of patience in this in this line of work, but patience pays. That's the thing. So you were talking about this cell right here. Technically, yes, because it's a swing point. Yes, exactly. But you see what I was talking about? That's why I was afraid of this buys over here and using answer for it because there's too many relative equal lows that they just like engineered. So these people who had the stops here dragged their stops over here. They're probably going to drop it really fast to take these and probably rebalance around here. But yeah, but this formation for like a bullish trend line. So this formation would be a little bit too. Okay, and I'll show you something that's super interesting that just happened. I didn't notice it because I was talking to you and I was marking the charts and that's fine. But it's I'm here to help you out and help myself out. So let me explain to you something that's really interesting. So the last down candle, okay, the last down candle, the last up candle before taking lows, right, is a breaker, okay? So let's take this last up candle before taking lows is a breaker. Breakers are going to be in orange, okay? What wicks love to do is coming to take out the last price point of the breaker and then going up from there. And they did exactly just that. So that's another trick that you could put in your book. They like to come in wick right below the breaker's low and shoot off. So that's called a bullish breaker. Break the lows, come back, take the low, and shoot up. Now we're going to relative equal highs over here. So that's very interesting. And the second, uh, okay, so exactly. SL should be on the last low before the breaker block. So the breaker over here, this is where your stop loss should be. Yeah, or this one. This one or this one, yeah, the low. Yes. And second of all, what happens on these breakers, okay, if it comes and takes the low and it goes up like this right away, you immediately move your stop loss break even. Because if it doesn't move back up quickly, it's probably going to be a failed breaker. So right when you get into profits, that's when you move it right away, because usually there's a strong reaction to a real breaker in this fashion. So right when, let's say, I'll put it as a visual, like right when it tapped over here and moved up and closed here above the breaker, that's when you move your stop loss to break even. I had just noted that the other day. Here, let me show you. I had noted that the other day. Bullish breaker notes. I wrote, if I am to trade the bullish breaker block, the moment I enter the trade at the bottom of the block and I'm in profit, I have to raise my stop loss to break even because it should not go back down to my order. So that's things you notice. You notice with time and looking at these setups and noticing why they fail or why you get stopped out. But you see no candles, no bodies are closing above the consequent encroachment of this order block, bearish order block. And they're even having a hard time passing the bodies low. Do you hear the sound well when I speak? Okay, good. Quite interesting. Yeah, very rounded on the tops like a wave. Yeah. And you see this? You would have placed your stop loss break even, and once it would have passed this high, you would have put it at this low right here. You would have trailed. Because if it's still bullish, it would not pass the low of this candle, right? Because that's the bullish candle. So you place, there you go, you see? So you place it right here at the low of this candle because that's the one that made the high. Boom. It respects it. And if it wasn't to be respected, well, it would break this low and then continue lower. But if it's a real bullish move, it will respect this low of this bullish candle. Took the low. Took the low, and the bodies stayed within this last fair value gap. Very interesting. So now we would have been in profit. Like let's say, I don't know. Let's do a little quick demonstration. Uh, we would have secured 0.05% profit, which pays for commissions for the week, which is great. Crazy open, huh? Just like this. Boop, boop, boop. We're still at almost the opening price. It's very, very. So the 10 to 10 over here, like 10. This was the opening range, right? And you're gonna see at the 50%, that's when it starts changing, and that's when it pushes up, and the quarters it starts changing. So now this would be used as an inversion, but over here, and you know what? So check this out. On the bullish breakers here that we take, right? What I like to do, I don't know if you like to win often or win big amounts. Tell me what type of trader you are. You like to win more often or win bigger amounts? Yeah, exactly. So what type? Yeah, it's good. Was it a good video? Should I keep on recommending it? Okay, you're used to win less and earn more. Okay, but if you're you, but what would you do you like? Would you like to win more, or you're fine with what you are used to? Yeah, it's very back and forth, so it's hard to catch long moves. So let me explain to you why I'm asking you this. So me personally, I like to trade a risk reward of around 1.2 to 1.5. Okay, so if I would have entered this trade right here, we'll do the setup. Okay, stop loss is below this low and 1.5. So 1.5 is crazy, but 1.5 is like here. Let's put it. 1.5 is this. That's 1.5. So in my trade, I would have won right away. And that's my stats that dictate that. But you see all the way to this new high over here is 3 to 1, which is crazy. So it is good risk reward. And you see, this is why I told you. Yeah, but to know this kind of things, I suppose you need some large time in the markets. Uh, I don't think you need large time in the markets. You have to know, you have to analyze what you do in the markets, right? So example like this account right here. Let's see if I could, I haven't entered so many trades to know how are my trades. Okay. I understand what you mean. How much time have you been trading? Okay, yeah, not consistently. I understand. So it's hard for you to understand what type of trends, trading trends you are your character is used to. Okay, yeah, I understand. Well, good for you, man. You just found the key to success with ICT because it is amazing. Yeah, Spanish creators who started content, who shared content, good. I recommend you just study ICT. So you see what I was saying over here? The last fair value gap up top over here, and this order block acted as resistance, and it created the liquidity for these people to bring from these stops to this stop, right? Just took them out. Now we're climbing for these people right here. And the lows were just taken right here. So it took all the relative equal lows. And believe it or not, there's still two left over here. And we're still within this price leg. So we didn't really change structure at all. We're just bouncing around within this price leg because this was a fake out on the 5 and not on the 15. 5 fake out and 15 too. Yeah, exactly. It's a sweep. Exactly. Over here. Yeah, the close is not below, but this is gonna, it's probably gonna continue for, but we shall see. Let me open another chart. So now we got into this last fair value gap on the 5 minute, and we also have the ones on the 1 minute if you want more precision. So we just tapped into one that was not tapped into yet. And that's probably the 61% retracement of this low to this high. Let's go check it out. From this low to this high, optimal trade entry, 61% retracement, exactly that. Now, since we broke below this, we might even use this as an inversion. Over here, not being able to break and close above. We also have this fair value gap over here. So now price is starting to move. You see this? We took the volume imbalance with it since the wick didn't pass the 50%, the consequent encroachment. And we're also staying in the bottom part of this fair value gaps range because of this inversion. So that's what real-time commenting is like, and it's important that you do it. Yeah, and it's important that you comment at the same time as you trade. You speak it out loud. Speak everything you're thinking because you have to catch yourself thinking the thoughts and and like reacting on those thoughts. So now, since we swept these lows in the AM, I think we're gonna start shifting over here. 70% retracement is starting over here. The only reason why I would not want to buy it on this last fair value gap over here is because of these relative equal lows. the two lows very close to each other. That's the only reason why I wouldn't buy this fair value gap and this 70% retracement, which is the sweet spot because of these relative equal lows. And you see these conditions. Yeah, it's super important that you speak when you trade because you're not able to catch your thought. If you're just thinking, the thoughts are just flowing and you can't reflect on it because then you battle with your logic, right? Not your emotions. So this happens and that's supposed to happen. If that happens, that's supposed to happen. And because I don't like this, then I'm not going to enter on this place. Or else impulse would have controlled you and I would have probably entered right here. So yeah, it's important. And remember what I said in the beginning of the session when you asked me, well, a little bit earlier, when you asked me if it always buys. Well, I think that right now we're at a turning point in the markets where you see not the new highs that are being created are not real extensions towards the upside. And here too, look, this highs over here was not, it's not like a full 400-point move above. This extension with the tweet or the agreement with the UK yesterday was not a full move above here. It stopped at the consequent encroachment of that order block and is turning around. So like the market right now is rounding off. Let's see on the 15-minute. You could see that it's losing steam. And now it's going to start rounding off. It's a bit busy, the charts there, but here, let's hide all drawings. So yeah, it's having a hard time. The slope, if you draw it in the middle, it's starting to lose its steam. So over here, as I said, that's why I don't take this trade. It broke straight through it, and it's coming to get those relative equal lows. Yeah, exactly. By probabilities, yeah. No, but I understood what you meant. No worries. And relative equal lows are going to be taken again. Let's see if we could find something on a bigger time frame. All right, just got taken. Let me take this off. This off too. We would have gotten smoked, if I wouldn't have been talking to myself out loud and debating why I would not take this trade. Yeah, no, it was 100%. It was 100% this option right here. So the reason why, okay, is because we were still. I wanted to see a reconfirmation, and I'll show you, and I'll tell you exactly what I mean by that. So now we currently have, in 1 minute and 31 seconds, we'll have our reconfirmation because we were currently stuck within this price leg, you see? So the reason why I didn't take the sells is because it could have started buying over here. Okay? Could have started buying over here and come and take this high. And if it would have went above this high, then I would have started to be bullish. because I need a confirmation. We were still within this range. So if we broke above this high and create a new high, then I'd know that if we'd come back into this first presented fair value gap, we'd probably be bullish. But now since the confirmation of the direction of this volatility in this AM session is going to break below and hold below these lows, I know that if it comes back into, let's say, this area, I could use it as an inversion for a short. Make sense? Yeah, exactly. We'd be searching for sells if we have a retracement. That's exactly it. Yep. Because here we failed to break, and then we failed to break above. But now we have confirmation, and that's where patience comes in play, right? Patience, super important to not do any impulse moves. Now that we have a break below, you see it over here, which is wonderful. And not only is it on the 5 minute, but it is on the 15-minute break below. Very important. So when you see a huge down candle like this, right, on the 15-minute, there's a lot of range that it could go back up to. So that's why we start zooming into the 5 minute, right, to see the fair value gaps that it let within that 15-minute. Okay, so for in order for it to be a bearish breaker, okay, let's see. Okay, so that's what you mean. Yeah, this one right here. So the last down candle before new highs is this one. Let's mark it out. And that's probably going to be at the same place as the inversion fair value gap. Yeah. So that's a breaker with this inversion fair value gap that comes from the minute. So I have an inversion and a breaker stacked right here. So yes, a short on this breaker, on the bottom side of this breaker could be good. And there's a 1 minute inversion. So we could even do it at the beginning of the 1 minute inversion or the beginning of the breaker. But that's where I would wait for a retracement. I wouldn't wait until the beginning of this fair value gap right here. I have a question for you, Roger. Do you see my screen properly or it's very not good quality? Okay, good. All right, no problem. Okay. So it just what happened was, okay, it stopped at the consequent encroachment of the daily fair value gap and continued lower. And that's fine. I mean, not trading is a trade too. It's important that you don't chase. You have rules and you use the rules to trade. So yeah, Roger, I hope you learned a lot today. I think I'm going to be ending the stream here. I got a couple of things to do with some friends, and I hope you have a great day. And to whoever is watching, thanks for tuning in. Uh, always remember that a better trading plan is always, yeah, no problem, Roger. So a trading plan that you follow is always better than a better trading plan. Have a great day, everyone. Bye bye.